Good day, Doctor and audiences. My name is Sheena Tangchajo with matrix number 281595. I'm glad to be here in this video to tell you about the investment choices that are available globally. Among so many types of investment alternatives, our group 2 had chosen 5 types of investment, which include property investment, unit trust, stocks, FD fixed deposits, and equity crowdfunding. Before we start, allow me to introduce our group member first. Firstly, Safalas Taufik with matrix number 258173, Jovina Anak Perempuan Anton Nesami with matrix number 282631, Priya Sen Anak Perempuan in Ilamaran with her matrix number 282607. Next is Tanisha Anak Perempuan Jaya Chandran with her matrix number 280272, and me again, Sheena Tangchajo with matrix number 281595. I'm sure that you have been heard of people said about investment, and you may be unclear about what an investment truly is. So let's find out on the next slide. Investment, in general, is the committing of resources into some endeavor or thing in the expectation of a positive return. In the case of financial investment, the resources being committed is going to be money. The endeavor or thing is going to be a financial investment, for example, stocks, bonds, real estate, and other, which will be discussed later. And the return is the difference between the money we end up with versus the money we put in, where we will get more money in the future. In other words, investment also refers to the strategy allocation of money with an expectation of achieving some benefits in the future. Meanwhile, investment is also an asset or item acquired with the goal of generating income or appreciation. Appreciation refers to an increase in the value of an asset over time. When an individual purchases a good as an investment, the intention is not to consume the good, but rather to use it in the future to create wealth. In short, investment could produce monetary value over time. That's all from me. I'll pass to the next presenter. Thank you.
Hello, my name is Taufik Safalas. My matric number is 258173. Okay, our group choose type of investment. The first one, property. Second, unit trust or mutual fund. Third, stock. 4, equity crowdfunding, and the last, fixed deposit. Okay, for first investment type is property. Property investment is a form of capitalist that similar other investment in that involve buying and selling asset and handling asset to generate income or profit.
Hi everyone, my name is Jovina Anak Perempuan Anthony Sami and my matric number is 282631. Today, I am going to explain about why investors should invest in this type of investment. So let's look at the first one, property. Investors can enjoy steady cash flow, great yields, tax advantages, and diversification with well-selected assets. And it's even possible to leverage real estate to build wealth. Condo income, appreciation, and earnings created from commercial enterprise spots that rely on the property are all source of property for real estate investors. Real property funding trusts allow investors to invest in real estate without having to own, run, or finance the property.
A very good day to everyone. My name is Priya Sen Ilamaran, matric number 282607. Thank you for having me. Today, I would like to explain about the advantages and disadvantages for each and every investment that we have chosen. First of all, I would like to explain to you all about the advantages of property investment. The first advantage is solo management. You can do whatever you want with the property. Designs, styles, plants, colors, all these can be configured according to your preference. You can even also choose who to rent and sell your property with. The second advantage is reduced volatility. People see investment as their high-risk investment and they can be bankrupt if they are not careful. This is the one only reason people invest instead in properties, as they are less volatile compared to shares or other similar options. Next, I would like to explain about the disadvantages of the property investment. The first disadvantage is liquidity. Property may not as liquid as stocks or other investment where you can pull out money anytime you want. If any emergency happens, you need money. You can't even able to convert your property into cash. The second disadvantage is this interest rate. Mortgage property may start to experience a high risk when interest rates started to high. The monthly repayment for the loan may become higher from what you earn and from what you earn than renting the property.
My name is Danisha Jayachandra, matrix number 280272, and I will explain why property investment are similar or different from other investment. How property investment different from other investment is that it can produce cash flow on a monthly basis. The cash generated by a real estate investment will be always much larger percentage cash on cash return than any other investment.
Second type of investment is a unit trust investment. Instrument or mutual fund are one of the surefire investment instrument for novice investor who do not have the ability and time to manage their investment.
Next will be unit trust. Investors seeking fair long-term returns can consider unit trust, where investors are willing to hold on to their unit trust investment for at least 5 years or more. Their money can earn respectable returns since the company they invest in have enough time to expand their earnings.
Let's look at the advantages of unit trust investment. The first advantages is tax advantages. Unlike a company, a unit trust does not have to pay any tax. The beneficiary has to pay income tax on the provisional profit they derive from the trust. Similarly, trusts gain 50% capital gain tax discount regarding the disposal of assets that can be passed on the beneficiaries if the trust is structured accordingly. The second advantage is asset protection. Unit trust holders also enjoy asset protection from internal as well as external parties. As none of the beneficiary holds the legal rights in the trust property, they cannot claim trust issues. Consequently, if any of the beneficiary cannot pay off their debts, the creditors cannot seize the trust properties as compensation. Similarly, if one of the beneficiaries involved in court proceedings such as divorce, the court cannot direct the trust asset towards satisfying the post claims. Next is disadvantages of unit trust investment. The first disadvantage is potential loss of control, as none of us of the unit trust holders have legal rights over the trust. They are at the mercy of the trustee. A trustee being only the decision maker and legal rights holder that might make decisions that the beneficiary does not always agree with, or the trustee decision might lead to a loss that cannot always be distributed among the beneficiary. Consequently, they might feel a loss of control on their own asset. The second disadvantage is cost. Setting up a unit trust could have a massive monetary notifications. They are traditionally more expensive to set up than a solo trader or even a company. Additionally, the beneficiary might be subjected to PAYG calculations. If their income is higher than a certain amount, they will end up paying a higher tax amount than the company tax.
A unit trust differs from a mutual funds in that a unit trust is established under a trust deed and the investor is effectively the beneficiary of the trust.
Next is stock. According to Kashmir, shares are securities that are ownership. This means the shareholder is the owner of the company. The larger the share of he owns, the greater his power in the company. According to Usnan, shares are evident to ownership of a company.
The next type of investment is stock. Investing in various firms, stocks can help the investors to develop their savings, safeguard their money from inflation and taxes, and maximize their investment income. When it comes to investing in the stock market, it's important to understand that there are hazards. Also, investors should know that different stocks have different benefits.
Continuously, I would like to explain about the advantages of stock market. The first advantage is easy to buy. The stock market make it easy to buy shares of company. You can purchase them through a broker, financial planner, or even online. Once you set up an account, you can buy stocks in minutes. If you are a small business owner, you may even able to invest in stocks through your business. The second advantage is liquidity. The stock market allows you to sell your stock at any time. Economics use the term liquid to mean that you can turn your shares into cash quickly with a low transaction cost. That means that is very important if you need any money suddenly. Since prices are volatile, you run the risk of being forced to take a loan. Next is the disadvantages of stock investment. The first disadvantage is professional competition. Institutional investors and professional traders have more time and knowledge to invest. They even also have a specific trading tools, financial models, and computer systems at their disposal. The second disadvantage is time. If you are buying a stock on your own, you must research each and every company to determine how profitable you think it will be before you buy the stock. You must learn how to read the financial statements and annual reports and follow your company developments in the news. You also have to monitor the stock market itself, as even the best company price will fall in a market correction, a market crash, or bear market.
Stock can be a valuable part of your investment portfolio. Owning stocks in different companies can help you to build up your savings, protect your money from inflation and taxes, and maximize income from your investment.
Next is equity crowdfunding investment. Equity crowdfunding is a funding scheme for small business.
The next type of investment is equity crowdfunding. Most, if not all, investors participate in ECF because of its firm's potential. The main advantage of being an early stage investor is being able to purchase a company's stock at a lower price before it skyrockets. Since their inception as startups, well-known companies such as Facebook, Telegram, Lalamove, Airtable, and others have all increased in value.
Next is the advantages on equity crowdfunding. The first advantage is less pressure on the management. Unlike the conventional forms of financing such as venture capital, equity crowdfunding does not result in the dilution of power within a company. Although the number of shares is increased, the involvement of the large number of investors means that the power is not concentrated around a particular group of shareholders. The second advantage is easier access to capital. Online crowdfunding platforms allow entrepreneurs and companies to showcase their project to a larger number of potential activities or investors as compared to conventional forms of capital raising. Disadvantages of equity crowdfunding: low liquidity. Potential investors should be aware that securities purchased on equity crowdfunding platforms are highly liquid. Thus, exit options are limited or may not even realistically exit. Just as is the case for traditional venture capital investors, crowdfunding investors may have to wait several years for their investment to pay off. The second disadvantage is risk of fraud. Investors must also be wary of potential fraud schemes in the equity crowdfunding process. Fraudsters may use important information as well as the loopholes in regulations to deceive investors. However, the crowdfunding platform companies work diligently to verify the information provided by the companies seeking capital.
For equity crowdfunding investment, this model differs from offering shares of a company on an official stock exchange.
For the last type of investment is fixed deposit. Fixed deposit, an investment instrument offered by bank as well as non-bank financial company to their customers to help them save money. With an fixed deposit account, you can invest a sizable amount of money at the predetermined rate of interest for the fixed period.
Another type of investment is fixed deposit. Fixed deposit giving more interest than the saving accounts. Not only that, investors can quickly get their money out when they need for the financial emergencies. They can take their money out of the fixed deposit at any time, but if they do before the term finishes, they may lose some of all the interest.
Furthermore, the advantages and disadvantages of fixed deposit. Let's look at the advantages of fixed deposit first. So the first disadvantages is safe investment. Return on stocks, mutual funds and debt funds depend on the market, unlike those of the fixed deposit, which makes the fixed deposit much safer investment. Additionally, the fact that they offer guaranteed returns makes fixed deposit an excellent choice for individuals with a limited amount of money to invest. Second disadvantages is loans against FD. When you are in a financial crisis situation, rather than breaking your fixed deposit and incurring a penalty, you can simply take on a loan against your fixed deposit with a loan amount of up to 90% of the total value of fixed deposits. With a pre-approved offer from the Bajaj Finserv, the users of loans become even easier. Let's look at the disadvantages of fixed deposit. The first disadvantage is low returns. When fixed deposit returns are guaranteed, they are also so slow as compared to other short-term market-linked investments. The second disadvantage is liquidity. Withdrawing your fixed deposit before the date of maturity leads to the penalty charge. You may also get a lower interest rate on that total investment when you break your fixed deposits investments. But that's all from me. Thank you so much.
For fixed deposit investment, apart from offering you a higher interest rate, FD also offer better returns because a lump sum amount earns interest for a fixed period. But when you invest in a RD, if you are investing for 24 months, for example, the first installment earns interest for 24 months, the second earns for 23 months, and so on and so forth.